Welcome to Volatility 411 for Equity Armor Investments. I'm Joe Tigay. Let's get right into it. We had an expiration day in the VIX. We expired for the month of August, 1858. Notably, that's above the 50-day moving average. The VIX is now off of that high we had on the open. We're about 1760 right now. Still above that 50-day moving average as we are waiting for the Fed minutes to come in. Now, the Fed has been hawkish for the past week, so really since last Friday. That's been making the markets kind of choppy, a little bit of disagreement back and forth on what that all means. And in spite of the fact that the VIX in spite of the fact that the market, is close to all-time highs, the VIX being above its 50-day moving average is notable. Now, one way to look at it would be to say, oh, the VIX has to come in and we have to see some complacency before the market sells off. The contrarian view is to say, wait a minute, the market's up, the VIX is up, somebody knows something. This happens at the end of a long rally, and we might see a bear market coming soon. We'll have to watch and see how that plays off, but I will just say we are coming into September. This seasonally is not so good a time of year for the market, and so that's what we'll be watching out for. Of course, head on a swivel as usual. The September future is now the front month. That's at 20 plus right now. I mentioned the spot cash is about 1760, so that's a notable gap between where the future's trading and the cash is trading. And remember, there is Labor Day coming up, so sometimes after that Labor Day, you get a little bit increase in the spot cash. But still, in spite of that, I still would say there is a gap there, which is pretty big, even though this is the start of the cycle. For Equity Armor Investments, I'm Joe Tigay.